I want to share a couple of ninja trading techniques with you. And when I say ninja, these are expert level automation techniques that you can apply to your trading. And I'm not referring to a platform in general, such as the NinjaTrader platform, but I'm just talking about expert level automation, knowing what you know about the strategy. So today we had crude oil after hours. It got long yesterday at 51.19. Its profit target was 51.89. We came up to 51.88, and we just sat up here at these highs, and we knew that the weekly inventory report was coming out. So one of the ninja techniques you can do is to exit before a report. Overall, the crude oil trades are up on the day, actually, as we speak, but this strategy was down. It would have been helpful to apply one of the ninja techniques that I'm going to tell you about in this video. The first one is to know when the reports are coming out, and I'm not advocating to not trade the reports, to turn off all automation during all reports. I don't advocate that at all. But if you're sitting on something that's, a few ticks away from its profit target, and a report's coming out that could just slam it the other way, that is one discretionary technique that does not tend to hurt your automation too bad. You want to be careful in how you use it and not start overriding all your strategies all the time on all the news events. But you don't want something that's that close to your profit target to disappear. And that's a ninja technique you can apply to improve the strategy results. I'll be testing the concept of exiting before the weekly inventories for the after hours trade and let you know the results of that. But it's hard to watch when it's a tick away, it comes down, stops you out 3 ticks from the lows and then bounces again. But our other strategies, we're able to profit from these moves so far today. And so that's the first ninja technique I can share with you. The second ninja technique I can share with you is that when you have profit targets, say 51.89, and you're set to cancel and replace at the market, you typically give up a tick of slippage when you do that. And so what you could manually do is turn off automation and set your profit target at 51.88. So you don't have to cancel and replace. If you get a tick of slippage, if it hits 51.89, you know you're filled at 51.88. And so that's another ninja technique you can use, is to set an OCO where you have 51.88 is your profit target, or even 51.87 if you want. I don't like to give up too much, maybe one tick usually. 51.88, and then your stop loss down here. So that's the second ninja technique. And if you use cancel and replace to the market, is to maybe go ahead and move your limit order one tick down and go ahead and surrender that one tick, since oftentimes you get that anyways, and then hold that limit there. And in a day like today, maybe you got filled, maybe you didn't, but that's the second ninja technique you can use. And since it only traded at 51.88, you may or may not have gotten filled. And the third ninja technique you can use, if you have two opposing orders, you can turn off automation and then wait till they're both filled to turn automation back on. So for example, the stop loss here was at 50.89. You had a 50.89, and if you were watching your trades, you saw that there was a buy on your gap fill and reverse at 50.89. And so you might want to turn off automation for crude oil after hours, as long as you know you're going to buy it again at 50.89. That way you remove a slippage in commission event. And when you remove that slippage in commission event, enough of those, you can save on slippage in commission over time, especially if you're trading multiple contracts. You don't want to, get a slippage in commission event if you don't have to have one. So if you have opposing orders, you can turn off automation and wait for automation to come back on. Now, to protect yourself in this situation, since gap fill and reverse has a $500 stop loss, you might want to put a stop loss. You could turn off automation here, and then put a stop loss at the stop loss for gap fill and reverse crude at 50.39 is where your stop loss would be, just in case there's a vaporized quick move down in crude oil for whatever reason. But once you turn automation back on, you would then cancel that stop loss order, because automation would then take care of it. And so those are 3 ninja automation techniques you can use. Now look at the trades for the day, the rest of the crude oil trades. Minus 325 on this was close to plus 700 or plus 675. So that was a turnaround there. But plus 245 on gap fill and reverse crude, plus 480 intra-trade on crude oil weekly inventories, it is short. So crude oil weekly inventories got short, and so it was favorable for the market to rally some for gap fill and reverse because it exited at 230, while crude oil weekly inventories is starting to sell, and it will exit at 4:59 p.m. Eastern time. So maybe this scenario will go in our favor for crude oil weekly inventories to rally, exit at a profit, and then the weekly inventories to exit at a profit as it goes down. So we'll see. You see the after hours getting short again on this trade, and so we have another short signal. We're now short signal in crude, and so we'll see how that plays out. We need 50.24 for the profit target on that, and 50 is a good test at this point with the volatility in crude. Now that is those are the crude oil trades. Let's go over the metals trades for today. SR counter-trend silver, 4 winners in a row and had a loss today, minus 125. Gold flash had its first trade since we released it, plus 620. It has a profit target of 700, so 8 ticks away, 7 ticks away from that. And let's see if we can get that here, 40 ticks away. And then we're really getting some selling here in the E-mini S&P. Fortunately, we are short on Tick Pulse. His profit target got short again, up $1,200 today on this strategy in Tick Pulse. But exhaust in reverse, which came back and made an equity peak, is down 1,000 on this. And so these are offsetting trades right now. And we got long on gap fill in reverse here. It's down minus 300, and gap continued TB is down minus 300. So tricky day in the E-mini S&P for it to gap up, stick, and then reverse. It did reverse on the Fed minutes that came out, and so overall looks like it's going to be a down day in the E-mini S&P unless we get a reversal. Exhaust in reverse has a tendency to continue to get back in, and it's very aggressive on these buying these dips, and so so we're close to the profit target on Gold Flash. And those are the trades for the day. SR counter-trend crude was another trade in the 50K portfolio. Some nice trades here. Small profit on the day. Bought the dip, got out a small rally. Bought the dip, got out a small rally. It doesn't typically do that, but these prices were near the previous day's highs, and so that's why they got out so quickly. And it's paid off so far because this market looks like it is rolling over on crude oil. So let's see, pessimism won. Nice trades today. It went through had about 4 losses in a row, and then we hit the profit target today on the short side, hit another profit target today on the short side, and now it's getting long. And so we'll see how this trade turns out for pessimism won on this very volatile day with this mean reversion system called pessimism won. And so I think that's all the trades for the day. Let's see, we are close to this profit target, so tick away from that profit target. So hopefully we'll hit that in gold, and it hits the profit target in Gold Flash. And this is my research platform that I have, and so we'll see how the ES ends up on the day. Anything can happen with these crude trades and the ES, and pretty volatile market.